Hey guys, thank you for clicking on this video. Today we're going to do an income statement. I already read this question. This is the accounting paper 2025, February, March. Yep, February, March. There we go. Okay, and today we're going to do an income statement. So Viraj is a retailer. He buys on credit and sells for cash. All right, that's not really important to us. He rents out an area of the shop to another business for 172 a month. Okay, so he has rental income. We know that. We just have to multiply this number by 12 months if it is 12 months. But so far, we don't know when he started the renting. And then we have all these things. The one thing I immediately realized is they have already helped us. They split it into debit and credit, which makes our work a lot easier, as you will see later on. I can already start doing the income statement now because I have everything, right? It's the trial balance. Now, a lot of teachers will tell you to also look at the additional information first, and that's good. Everyone has their own style. So revenue, we always start with revenue, right? Revenue is 89,600. So we will be using that. And then we want to get net sales. Revenue is sales. So we want to know if there's any sales returns. Did anyone give whatever we sold to them back to us, right? There is sales returns. There we go, 2195. And because these two are opposites, you notice that if my revenue was on credit, my returns of that revenue will be on debit because they minus, they're opposites. Okay, now that I have my net sales, the next thing you want to get is what we call cost of sales. Okay, so what are cost of sales? Well, there's a very nice formula that I will put on your screen. You guys can refer to that. That I would say is the full list of everything I've seen before in IGCSE. Okay, so now we want to look for the first thing. It's called opening inventory. We know the year end is 31st January 2025. 1 year before that will be this date, 1st February 2024. So we'll put this 4,500 in. And then the next thing is add purchases. Do we have any purchases? Yes, we do. 53,700. So we'll put that in. And then we can check for other things like your carriage inwards, your inventory drawings, any purchase returns. Do we have that? No, we have none of these. So we can just remove one by one. And then we end up with closing inventory. Now, if opening inventory is already at the trial balance, the closing inventory will never be there. So that's when we look at our first additional note. We go down and then you can see, oh, inventory at year end date was 5,900. So we'll just minus this number. Okay, we will end up with gross profit. Okay, then we try to add any income that we get. And remember when we read the question, we know that they have rental income. I'm just going to put this 2,580 in. I guess that's the only income. Incomes are on the credit side, so we just have 6 numbers to check, and I can see the rest are liabilities, so we don't have to care. Now we subtract expenses, right? Again, expenses are debit accounts, so I only have to check this list to see which ones of these are expenses. And I'm just gonna put that here, expenses. And then when you minus expenses, in this case, let's figure out what our expenses are. We have general expenses, rent and insurance, wages, stationery, advertising, bank charges, and then depreciation. Okay, because I know fixtures and fittings are an asset, but because it's a non-current asset, it can depreciate. And in case that wasn't obvious enough, there's already a provision for depreciation. Right, I'm going to highlight that. There's already a provision for depreciation. So I just need to get this year's depreciation. That's when I need to go to my additional notes. But before that, let's just put all of these other expenses in, okay? And then now, I guess we're done. If you subtract the total expenses, you should have net profit for the year. Remember, we have a few additional notes that we have to consider. Okay, so let's look at the first one, inventory. This is the closing inventory. We already used that. Next is depreciation. It's 15%. Okay, so whatever my value of furniture is, 12,500, it will drop by 15%. We also have to check one more thing. It says using straight line method. That means every year it will drop by the same amount. Perfect. So I just have to take 15% times 12,500. That will be my depreciation for this year for that non-current asset. Next, rental income cover the period from 1st February to 30 April. The rental income is 2,580. has already been paid extra because our year ends at 31st January 2025, right? We paid till 30th of April. That's an extra 3 months that the tenant prepaid. That means we owe the tenant back instead of them owing us. It's a current liability. It's a liability. But why is it current? It's because it's due less than 12 months. Okay? And then what else? At 31st, okay, year end, Viraj owed this much for wages and this much for advertising. In accounting, expenses are recorded when incurred. That means if I have spent this expense, even if I haven't paid the money out, even if I'm owing that person the money, it's considered incurred. So even if I'm owing the 282 for wages, even if I haven't paid out this wages, I have to add this to my total wages. I have to add another 282. And then there's this $55 for advertising. So we'll also have to add that in. The advertising, oh, there we go, 55. Okay, so remember to add that to your final amount. After the trial balance was prepared, bank statement, bank charges of 13. We didn't know about this charge, but because we incurred it, again, we didn't know about it, but it's being spent. And in this case, it's already paid out because that's why it will show up in your bank statement. So it's $13 we have to add to our bank charges. Do we have bank? Yeah, we do. So it's plus 13. Now, if you make these changes to your income statement that we previously did, you should have your correct net profit. Thank you for watching.